Welcome back. Tackling trade. President Trump is touting progress on a deal with Canada, and he doubled down on his policies with China.
Trade talks are coming along very well. We're dealing with China, as you know. We've taken a very tough stand on China, I would say, to put it mildly. And with Canada, they want to make a deal very much.
But it comes as China is stepping up a charm offensive with multinationals. Businesses are then ramping up their lobbying efforts against the president's tariffs plan. Joining us now is David Nelson, Belpointe chief strategist. David, it's good to see you. Thanks so much for joining us.
Thanks for having me.
Has the strategy at Belpointe changed as a result of the tariff news?
No, and probably earlier in the year we were pretty concerned about it. But look, if you're looking for a scorecard right now, the United States, U.S. markets are at an all-time high. You just saw, small business optimism hit a record high. And over in China, obviously, they're in a bear market. Emerging markets are in a bear market. So much so that in China, they're actually instructing banks to loosen standards to spur credit growth. So the action's right here in the United States, and this is where we're concentrated.
Yeah, I mean, the story in the Journal this morning, top story, is Chinese leaders are stepping up a charm offensive with U.S. multinationals as Beijing changes tack to keep the trade fight with Washington from scaring off foreign investors. So is Beijing reaching out to multinationals who want a foothold in China to try to use that as leverage to go to their administration?
They're throwing everything up against the wall. They're trying anything they can at this point. So you've got lobbyists here representing businesses here in the United States who are weighing in on the president. And now they're bringing in business leaders from J.P. Morgan, Blackstone, Intel, and others because they know these important leaders have the president's ear and they're likely to hear them. It's interesting that they're concentrating lobbying efforts for some of these lobbying firms in Washington where the president's likely to see it, which is pretty smart. And one caught me in particular was they actually put road signs on a road, billboards where Secretary of Commerce Wilbur Ross was traveling on a way to a meeting in North Dakota. Anything to get the job done. But we have an interesting time right now. President Xi understands that business leaders here in the United States want to defend the status quo. And they've been counting on that for decades. They know that business leaders think in terms of quarters. Politicians think in terms of an election cycle. They think in terms of decades.
Yeah, and of course, a lot of those business leaders, especially off the record, will talk about how they're not necessarily being treated so well in China. But they do want this trade to continue. And I wanted to ask you, as investors look at this, we think maybe we're getting a deal with Canada. Seems like we're on the way to a deal with Europe. But the president's tweet about Apple last week suggests that maybe we're not headed toward a deal with China. We're headed toward a permanent situation where he's trying to bring manufacturing out of China back to the United States. Are investors how are they going to respond if they decide that this China fight is not a art of the deal that's about to be wrapped up, but is something more long term?
I think investors need to understand that the math doesn't work for China. We ship to them maybe $130 billion worth of goods. They ship to us $500 billion. So they're going to have to try something else. President Xi is dug in, and I frankly think this president is dug in. What I'm hoping is that we can conclude a NAFTA deal. He pivots to Europe. And we get something done there. And then, as Larry Kudlow puts it, the coalition of the willing, and go at China with strength. What I think Xi will finally do, though, is he'll wait for the midterms. He'll drag his feet and wait to see if the House or Senate flips. And if that does, then he'll feel a little bit stronger.
But what about David, about the political risk of American businesses, corporations doing business in China? We saw, Maria, this week about the Muslim detention centers in China where human rights atrocities are on a massive scale. And we see often, so many times, American corporations sort of lecture to the U.S., to our own politicians about how we should behave. But to think that some of these major companies could be operating in China when you're seeing full-on detention centers and religious persecution, doesn't that have to be factored into your business plan at some point, the ethics of it?
You would think so. And think back, a number of years ago when Google pulled out of China for those very reasons. They were concerned about censorship in China. But it's about money. And all of a sudden, Google is trying to get back in there. Facebook is trying to build a center over there. They're not there right now, and they'd like very much to be there. I think we have a time in our economy right now where our economy is pretty strong. If we don't do this now, when are we going to do it?
Right.
Because this is not just about the business environment today. It's about the landscape our children are going to be looking at 5, 10, 15 years from now.
Yeah, you know what? You mentioned the technology area and social media, and I want to just bring to everybody's attention this tweet that Majority Leader Kevin McCarthy put out yesterday. Let me read it to you. It says, Google claims to be fair but gave a silent donation to left-wing group to stop Trump. Google works with China and Russia to censor the internet but cancels a contract with the Pentagon. Ignores Senate hearing. It's time for Google to answer some questions. An invitation will be on its way shortly. Now, I thought that was pretty aggressive. And, you know, I'm wondering if technology has taken a different stance in terms of how you invest here, given this new spotlight on potentially more regulation.
Something's going to have to happen. I view right now as Google maybe one of the most dangerous companies on the planet right now. This company, think of everything that we use. You go on Google Mail. You don't even write the email, right? You don't even send it. It goes to them. They're listening in our homes. All of these companies, at some point, what are we going to do about regulation? It's a real challenge for us because the antitrust laws that were written for Standard Oil in 1911.
But has that changed your stance toward investing in these stocks? Yes. Because this is where a lot of the growth is, right?
I don't own Google right now, but
Okay.
I certainly am full boat tech right now. That's where the growth is and where I have to put my money.
And do you see a long runway as a result of perhaps more tax cuts? Because House Republicans are looking to make the individual cuts permanent in Tax Reform 2.0. What kind of effect might that have on the economy? Is that another reason to get invested?
I hope that happens. I don't know if it's going to happen this time around. It's going to be an interesting political dynamic because it's going to force Democrats to vote against a tax cut again. In this
But we're
coming
headed towards
election.
$1 trillion deficit as well, so.
Well, you got 4,000 agencies out there, all with a budget. Let's address the spending side of it. And every one of these agencies wants a budget that's higher next year. That's the problem.
Yeah, but bottom line, you're still invested, and you think this market...
I am fully invested right now here in the United States.
David, it's good to see you.
Thanks for having me.
Thanks so much. David Nelson joining us there at Belpointe.